right. Cool. So something I didn't review on Wednesday, right, was the fact that we just concluded our November monthly candle. Right, that's just something to, I guess, reference, just for, obviously for the, I just want to reference something for the, from a short term, and by short term I mean for the next month. I just want something, some type of bias. But we're approaching a very key area, right? As you can see, right, we're continuously pushing up, but we don't have any supply driving our move to the upside. So that's pretty alarming, unless, you know, obviously we just explode this month, right? Which is why I'm probably going to lay off the last week of December, maybe the first week of January. I know last year I took the last 2 weeks off of December, and then I took 1 week off of January. We'll see how it goes this week, and that's just because we're obviously coming into a potential point of interest. Right, obviously inefficiency fill here, right? It's something we're approaching, right? And just because we've already flagged up, we can easily see a liquidity grab. Would it make sense in the long term? Not really, not necessarily, not now, especially because we've already solidified, right, our unwillingness to break a previous low, and we've already had multiple structure breaks, right? And this is a very big structure break for me. A big reason why I really never wanted to sell EU, well, when we were here, right, was because this is expected after we're clearing so much liquidity, right? And as you can see, this is where the corrective structure started back in 2018. So as soon as we broke that, I just saw that as a full break of volume, right? Because volume is needed to obviously correct here after an impulse. Right, it wouldn't make sense, right, if we pretty much have an impulse here, right, and then consider this to be another relative impulse, right? So I'm just identifying it as a range that started or corrective structure after, right, a very impulsive move that broke structure. All right, so something has to be happening here, right, which is why every time I say when corrective structure, right, is broken, right, it significantly means something, because in this scenario we were either going to react here or we were going to take out structure or liquidity here, right? So now that that was broken, right, as you can see, all we did was find the continuations and go from there, right? Same thing with GU monthly, right? We'll go deeper into this one in a bit. Just waiting a little bit. I'm gonna go through EU first. But right, this is obviously a different scenario where we had liquidity there, taken, grabbed, right? And we had pretty much a quote-unquote retest, which then led to what we are currently at is a potential structure break. So for the most part, guys, you know where the bias is. There's no real reason to go against that. So I'm just going to keep going, you know, as it is. The interesting part here, though, right, is DXY is also approaching a pretty key area in price. Right, we've already tapped that inefficiency there and reacted from it, right? This is also a big reason why I showed you guys that study from here, the liquidity grab, break of structure, continuation to take out liquidity, right? And that was originated from this here. Alright, it's not something I would play off of, but it's something good to study. Personally, that's not something I would take. You guys know this, right? I have no reason to even try to hedge this yet. Well, now I do, But while we were here, no reason to hedge unless you're trying to essentially guess the low, and you can read impulse, potential correction, impulse, right? Let's see. Candles. Candle must not cut price. Can somebody explain here what that means? It's something a ton of people are confused about, and I think you guys are just overthinking it. Who here has a type of definition for that rule? Right, because the big rule people have confused. Alright, hold on. Sergio, make sure to mute everybody, please. Thank you. That just means that if you're saying this is your SC, it's invalid because there's already candles. Right, for example, we paused here and then we left, meaning the SC would probably be inside of the wick. Another example, where was your example at? Let's look at your example. All right, so where was the one that I corrected? It was here. All right, so you analyzed this candle, but after this candle there was no immediate reaction. There was obviously a stallment of 1, 2, 3, 4 candles before we fully dipped, we fully left. So what I mean by this is not your SC. Your SC is inside this wick because this was the last move that then created the impulse, right? Meaning that that is now your POI. Your POI is somewhere in here. It could be inside the wick. Obviously there could be like a smaller candle here, right? It gives you more precision, but that's all it is, right? There cannot be more than probably 2 candles, right, after your SC. If not, then I consider it to be invalid, right? Like here, that's not an SC. See, this technically SC. See which other one? Right here, yeah, that was valid. I see somewhere there. Right, you see that wick there, which then created POI. Yep, all in the wicks, bro. Like literally, it's all in the wicks. But yeah, hopefully that cleared that up. Oops. Is that cool or is that too small, guys? I forgot what I had it at. We can do that. That's cool. Right, so coming back to EU, right, even though we're pretty much seeing indecision now, maybe you could see a pullback, but I really want to see what happens once we reach back into inefficient pricing. Why? Because this is obviously a discount. So I'm looking here. Previous high, the dip, right? We didn't fully break this structure, right, up until I guess here, right? And the reason why I'm using this and not this, right, was just because of the actual dip, right? I just consider these to be continuations. So this is the last pullback to that final impulse. And this is your, obviously, discount premium. So I really want to see what happens. This is a tricky one because we're now at a point where we're super overextended, right? And no true supply is shown, or demand, I'm sorry. Right, no true spikes. And that's pretty alarming because I don't really see anything to the left here. And anything I see to the left here is probably just trying to guess a high, right? And even if we have an intraday break of structure from here, I could still consider that a type of pullback to then continue higher. So I'm just waiting to see what happens on Monday and then go from there, right? I just want to see how Monday's closure goes, right? Because no matter what, this weekly is still extremely bullish. Monthly still extremely bullish, so no real reason to want to fight against that. Next one, GU. This is the one that we pretty much primarily focused on Wednesday, I believe. Right, I believe we were around, we'll say 5th, yeah, we were around here, right? And we were speaking about these equal highs here that were taken out, I believe, yeah, pretty much right after the call. No, right during the call. During the call, this was being broken, right? And all we did from there was pretty much structure continuations, right? Come a high, right? Pretty much grab liquidity, create a higher high, achieve a discount, and continue higher, right? And from there, we cleared our equal highs that were here. And remember what we talked about. Oops. Remember what we talked about was if GU could substantially break these highs, which it did, right? We can very well easily see right, this overall high be taken out, which is exactly what happened. And why did I say that? Is because if we break these highs substantially, that's considered not only a pretty much a capture of liquidity from here, that's also considered a full-on structure break, right? So after that immediate impulse, right, you just need to find that continuation, because remember, hold on, let me take this, all this mess off. So now that we've broken structure, right, we now have a high below a previous high, right? Now, technically, we're seeing something like this, right? Essentially creating a trend line, which was at the time there, right? But because we've already shown unwillingness, here, break of structure, discount, continuation, full break of structure, pullback, full break of structure, right? Now that we've seen this, we have no reason to believe that this should not be taken out. We have no reason to believe that, right? That should be your immediate next target. So as you're playing that, right, we now have relative equal lows there. I mean equal highs, I'm sorry, right? You now have relative equal lows here, right? So I believe this is during London. Yep, during London, right? You have one liquidity grab, right? But because we were unable to break structure, right? Because this high did not, because this low did not create a new high, right? This low is not considered liquidity. That was taken out. And then from there, an immediate reaction to the upside, right? Meaning this is now GU showing its hand. That's all it's doing there. It's showing its hand. This is the exact same scenario from the H4 EU that we've been talking about for the past couple weeks, right? Same principle, where the pair is showing its hand and it's showing the direction it wants to take based off of momentum, reaction, and you're just trying to catch the follow through. So, right, from here, all we saw right, inefficiency fill, can easily put your stop here, right? That's a 20 pip stop. That's actually, I'm sorry, that's not right. Yeah, okay, that makes more sense. That's a 9 pip stop. I'm sure we could have minimized that if you're trading London. Right, multiple ways to play that. Reaction, micro. I'm sorry, hold on, let me take this off. Reaction, micro break of structure, discount off of inefficiency. And that could have easily been an entry with stop below the low, 4 pips. Right, or, right, you could have been able to read this. Right, I'm going to read this on M1 because I know everybody doesn't have seconds time frame. Right, so as I'm reading this, right, this is now unwillingness. Why? Because we were unable to take out the previous low. Right, so we now have it showing its hand again. Right, and yes, you may say this low, this high created this low, we're still in bearish structure. But remember, right, that this is considered a scalp, a scalping move that completes the correction of this impulse that took out previous structure that supports the entire bias that we've been talking about, right? Okay, so if you didn't want to get it from there, you could have easily had a much more conservative entry here, right? Much bigger stop. That's about 45, 6. That's about 6 pips, right? Where you're obviously targeting up here, right? And because we're so high in price, this is easily just an intraday trade that, you know, you can easily take your full volume from. Why? Because we're taking out a very large point of liquidity, which is on the weekly time frame, monthly time frame, right? And as we've seen before, especially recently, the only one I can think of is EU. The last time we took that high, I'll show you guys in a bit. But anyways, because we're clearing out so much liquidity, I'd like to get out of this trade immediately, right? Just so I know exactly. I mean, I don't try to risk myself the possibility of having this liquidity grab, break of structure, and then just start pulling back, right? So even though this is a break of structure here, that would be considered a pullback on the daily time frame because of how bullish we are, right? So as you can see here, that smashed right during New York, right? New York left equal lows, right? Which we then, after we saw the liquidity grab here, right? We see the corrective structure for continuation, fail, right? We then have a pullback, correction flag, takes out equal lows, and this is potentially the start of a pullback because we've cleared such a big level of liquidity here. To grab the elegant. Yes, Harris, exactly. Yes. Right, so this is something too that you guys have to be pretty much patient for. Letting a pair show its hand, right? And just because it happens on M1 does not mean it happens anywhere else, right? We've discussed this for months. Show its hand. Right, you remember we pointed this out when price was like around here? right? And I'll forever reference this, right? Show its hand, discount. Right, even here, show the hand, discount, continuation, right? Allowing something to show its hand, right? Other than that, you're essentially trying to guess and going based off more off optimism than actual raw price action and actual raw rules, right? And even though we're seeing this start to pull back, I'm not too convinced that we'll see a deep pullback, right? Because now we have to reference, right? If we break the structure point, this is still our entire leg of structure. So easily can see any type of discount. And the cool thing too is EG looks like it wants to reverse again, right? This is a funny one. I haven't touched this. Right, ever since we acknowledged the fact of the unwillingness here, and then the pretty much the breaks of structure here that continued, right? But I did have something marked up. I just didn't speak about it on Wednesday, right? And that was, let's see, 19. Right, this was, I believe this is what I had here, right, as my point of invalidation. Right, because this led to that full high, so I would have expected this reaction here to create a new high, but it didn't. It failed. Right, that failed. Right, this is the entire leg here. Right, this is the entire leg that led to the final break of structure here. That was broken. Right here to begin the pullback, but this is the point of invalidation. Right, so the only issue now, right, is of how close this came to the point of invalidation, because even though we broke a structure point here, right, and we're essentially seeing a continuation here, which I do see this taking out this low, the tricky part is that technically, right, previous highs, this is still in play. After an opinion, give another entry. Yes, it did. So it's super weird position to be in. Weekly on EG is messy, but for the most part, I mean, I still see the space being filled here. It's just, it doesn't make sense. It doesn't make sense for this to want to go up on any scale. We could easily be starting to play bearish order flow. I'm just looking for it to show its hand. That's all I'm waiting for. Damn. But yeah, I mean, I would love to see this really start to retrace. Really, like, I would really love to see this start to come back down. Well, yeah, other than that, ooh, my bad. Other than that, I mean, textbook, guys, textbook. No real complaints from me. Do you guys have any questions? Anybody? Let's see how many people we got. 24 today. Nice.
Yo, Fredo.
Yes. Who's this?
Yeah, so can you go to GU on the 5 minute? Yeah, if you zoom out. Yeah. So I'm gonna annotate. Can I annotate on a?
Yeah, go for it.
So we had this expansion, right? And I remember you saying this kind of consolidation was considered a turbulence point, right?
Yeah.
So I was thinking about like some type of reaction up this zone and then continue up. So but I measured equilibrium as well, right? So kind of confused about that.
Where did you mark your equilibrium?
Yeah, so from here to here.
Oh, you're going from the full leg.
Yeah, yeah.
You're going for the full leg. Okay. So the only reason, right? This is another scenario, kind of like the one where I took my entry off of. Where was my entry off of? Here, I believe. Here, yeah. Right, where here we didn't reach the discount, right? Same scenario, pretty much same scenario to an extent, right? And the reason why is obviously your POI is inefficient pricing, right? But the only reason why I took this trade was because we saw liquidity form, right? Liquidity formed, extremely deep retracement, and I took my position here off of this reaction, but I was willing to take this loss in case this happened. So in that scenario, what the hell? Why is this not? Okay, sorry about that. Right, this is one of those scenarios where you have to be able to read microstructure, right? Because in this case, we have liquidity formed here, right? We have the reaction of the POI here. You could even consider this a micro breaker structure. And the reason why I'm not assuming this to be a continuation to the downside is because remember that the overall bias is still bullish, right? So I'm just looking for an excuse to risk. Whereas here, I took the reaction off of here, but you could have easily, as I said Wednesday, could have taken the reaction off of there. And in here, in your scenario, right, what I just said, right, and you're still new, so I don't expect you to fully understand this just yet. In the scenario you spoke of, you have to be realistic here, right? If we've already seen an impulsive move to the upside, like there's a reason why I didn't acknowledge this to you guys, but I acknowledged this to you guys, right? And do you guys know why? Do you guys know why I'm also acknowledging this over this? Right, because pretty much back when we started, I would always point out the exact point where price reverses. Right, and the reason why I'm doing that, well, I'm not doing that now, is because it's instinctively making you guys try to find the exact POIs, and it's confusing you, right? Whereas all I need to know is that this move here had a reason to break this structure point here, right? So if we've reacted from a point here and led to a structure break, why would I think that we can still see the discount? Right? Because that's now not being realistic. Why? Because your daily, your swing, H4 intraday, your swing intraday, and now minor intraday and even scalps are now supporting the same bias. So this is what's worth my risk.
Yeah, it makes sense.
Right? So it's all that, honestly, it's all about making it make sense. That's all it's about to me. Right? If I can't make an educated decision on why I should take this buy, then I'm not going to take it.
Yeah, 100%. Thank you, bro.
Mm-hmm. Entry on that leg? Where? Where is that safer entry? Is it, I guess this is an inefficiency here. But this came back. Right, either way, we didn't break structure, so you shouldn't be break even. But inefficiency there. I don't know what you mean by a safer entry here. Let's go. Where is that safer entry you're talking about, bro?
Hey, Fredo. It was where you actually rewind where the initial entry was that you took for GU.
Mm-hmm. Oh, okay.
Yeah. Where you took the entry off of the 15 seconds time frame. Yeah. So without even going to the 15 seconds time frame, if you go back to the minute time frame. Right, there was, where you took the entry, there was a break of structure. Well, I would say a micro break of structure.
Can you annotate, please?
Yeah, just one moment. Options. There was this micro break of structure that I saw, and there was this inefficiency here that it came back, price came back, filled it, and then
yeah, that's immediate. Yeah, that's one of those like pretty much immediate profit trades. Right?
Yep.
And your stop is here. Perfect. Yep, you could have easily even put it a little bit higher, but yeah, this is your pretty much point of invalidation here. If we break this point, then we're bearish. Yeah, that too. Yeah, that's the one I was thinking you were talking about. The only issue, actually, there is no issue with that entry. Yeah, this is still in session. Yeah, that's good. Save entries. Okay, where is this one? Where is this entry from? Okay, this, I see your entry. Liquidity grab. Okay, this is your refinement. Cool. So is this a second time frame entry? Or did you take it off the closure? Okay, closure. Okay, that makes sense. Yeah, that makes sense. I see. That closure there. I see. Makes sense. So you like the trade-off closures. That's cool. That's pretty, that's very, how do you say, very conservative. I like that. Yeah, bullish closure. I see what you see. I see what you see. Yeah, going off the closures, I see. Dope. This price action is so different though, I know, Enda. That's pretty weird. Because you see... Where is that at? Hold on. 134.60. Yeah, right here. Weird, because this, as you can see, this is reacting from the inefficiency fill here. Whereas this wick is going off of the wick. Interesting. Interesting. Nice. But yeah, other than that, do you guys have any questions? Brokers always be playing games. Yep, pretty much. That's also why the new material is gonna be more so catered to hit rate over just plain out having RR outweigh your wins. I mean your losses, I'm sorry. And the reason why I'm saying that, right, is I believe that people that still continue to say that RR is everything, I believe they haven't traded this method for over a year. And the reason why I say that is because yes, the RR will overall outweigh the losses. But something I've realized, especially over the past couple months, is that the continuous losses will hurt your psyche. And as soon as your psyche starts to essentially fail, then you're now in a quote unquote position of shock, and you start to essentially trade against your plan, not in rhythm with your plan, and you get out of your overall flow, right? So that's also like an experience thing, right? You guys know that I don't really preach RR as much as I can, but there's reasons to that, and that's kind of the reason to that. It's the whole psyche aspect. Oh, most definitely better to have hit rate. Yeah, because at the end of the day, I don't care who you are, right? That red is gonna affect you. If you see that red on MT4, MT5, on C Trader, right? It's gonna fuck with you eventually, right? Because that's at the end of the day, we're people, right? And I believe that 99% of people can't, overall, how do I say this? I don't want to say control, can't fully delete their emotions, right? Which is why we aim for control. Yeah, but don't worry, guys. Nobody else will tell you that. Yeah, humans at the end of the day, yep. Just have to enjoy it, bro. You genuinely just have to enjoy it. Yep, exactly. Yep. Which is why I don't attempt trades more than 2 to 3 times. Like, I mean, not trades. I don't attempt scenarios. I don't attempt biases for the day or for the week more than 3 times, because I know that if I get 3 losses, I'm definitely doing something wrong. But it's all a process. Yeah, I'm definitely trying to work on helping you guys more with hit rate now. But yeah, other than that, are we good, guys? Are we good? Control losses when the game changes. Yep. A controlled loss is a victory. A controlled loss is a victory. Remember that. Yep. I'll see you guys Wednesday at 9 p.m. my time. All right, guys.